Very good morning. You're watching NewsX and I'm Shivani Singh. We are tracking the latest developments regarding the war in West Asia and its implications across the globe. Now, Iran has once again ordered a complete closure of the Strait of Hormuz, one of the world's most critical choke points, early Thursday, in retaliation for the continued US strikes on the country. The Iranian military has warned that any vessel attempting to pass through the waterway will be fired upon. Now, this comes after a fragile ceasefire between the US and Iran unraveled this week following attacks on 3 commercial vessels transiting the strait, a Qatari-owned LNG tanker and a Saudi-flagged supertanker among them. Well, we have some breaking news coming in at this hour. Gold and silver prices declined on the MCX in the morning trade on Thursday, July 9th, as fresh tensions between the US and Iran fueled inflation concerns and expectations of aggressive monetary tightening this year. MCX gold August futures were 0.30% down at rupees 1,43,275, while MCX silver September futures were at 0.76% down at 2,21,749 rupees per kg at around 9:15 a.m. International gold prices have also declined as fresh hostilities between the US and Iran revived concerns over higher inflation and interest rates hikes in the US. Well, joining us on the broadcast is Dr. Sharath Kohli. He's a senior economist who will help us decode what is next for gold and silver, for precious metals, now that we are seeing an increased in renewed hostilities. Dr. Kohli, a very good morning to you. Thank you so much for taking out your time. I want to understand from your perspective, how are we looking at precious metals now trading? Obviously, we had seen a kind of a stabilization period when the ceasefire was in place, but once again we are seeing this volatile movement.
Good morning to you and the viewers. Yes, gold silver prices have again come under pressure ever since this earthquake kind of a thing came after President Trump made the statement in the financial markets and capital markets and commodity markets, of course, because the dollar index in the US, which was getting closer to going below 100, has again got closer to 101. Bond yields have gone beyond 4.5. They were well below 4.5 just before this fresh aggression started. So I think when the bond yields go up, the investors feel that fixed return investments give better return and gold and silver don't. So they tend to create short contracts in the COMEX in New York. That's where the price emanates from. That's where the price discovery and price determination happens from. And of course, Fed minutes came out yesterday, and the minutes say that, it may not be immediate, the Fed rate hike, but then the chance of inflation is not ruled out. And it is turning out to be so true because of the crude oil prices going closer to $80, down from 72, 73 to about $80. So that has again, sort of renewed the fears of inflation and a rate hike later. So all these factors combined together have made the speculators make sale contracts or short contracts on the COMEX in New York.
So I want to then understand, will gold prices continue to go upwards in India, gold and silver?
No, I think the long-term trend of gold and silver is very good. When I say long-term, I'm talking of 2 to 5 years. So, but short-term, this volatility would be there because gold had recovered to almost $4,200, which is 150,000 rupees per 10 grams, just 2, 3, 4 days ago. And now suddenly after this, the whole thing started, it has gone down. I think the long-term trend is good, but short-term volatility would be there. So it's good to be an investor and not a trader in gold is what my advice would be. Although an advice for investment should be taken from your SEBI-registered, financial or investment advisor.
Absolutely. Dr. Kohli, I'd request you to please stay on with us. From precious metals, we are now going to track what is happening in the oil markets. Well, fresh fighting between the United States and Iran has sent global oil markets into turmoil. Brent crude has surged close to $79 a barrel after fresh US strikes on Iran reignited fears of supply disruptions across the Middle East. Brent crude climbed to an intraday high of $79.15 a barrel and was trading around $78.68, while US benchmark WTI crude rose above the $74 a barrel mark. Now, the rally came after American forces carried out a fresh wave of strikes on Iran, with US President Donald Trump declaring that the ceasefire was over and warning of possible further military action. The renewed conflict has triggered concerns over the security of oil supplies from one of the world's most critical energy-producing nations. Rising crude prices have also rattled the global financial markets, and we will look at, in fact, those market later. First, let's look at the global oil prices and what they are in fact saying right now, because oil is something that has been volatile over the past few months since this West Asia crisis actually unfolded. So let's track some of the oil prices. WTI crude on July 9th, which is today, it stands at around $74.35. There has been a change in the upwards of around $0.84. So the change percentage has been around 1.14% in the upwards direction. Let's also look at Brent crude, another marker that we are tracking. So on July 9th, it is standing at 78.91 US dollars, which is around a change of 0.89 and percentage change of around 1.14%. Obviously, with renewed fighting and hostilities, we will continue to see a rise in the prices. Let's look at Murban crude, which is at $73.57. There's been a change of around $4.60. So that has been the increase, and a change percentage of around 6.67% in the upwards direction. So almost 7% change over here in Murban crude. We are looking at now DME Oman, which is looking at a price of around $64.33, a change of again $3.63 in the upwards direction, and a change percentage of 4.43%. So across the board, we are looking at increase in the prices. Let's look at the Indian basket, which is standing at around $68.21. There has been a slight change in the negative for the Indian basket of around $2.50 and a change percentage of 3.54% in the negative for the Indian basket. So that is something that we are seeing slightly different from the trend. Let's also look at Dubai crude, where it's standing at $67.43, the change of $2.30 in the upward direction, and a change percentage of around 3.53% in the upwards direction. So we will obviously be continue to track these oil prices, but Dr. Kohli, I want to understand from you again. We've seen some sort of a stabilization, oil prices going back to normal. With these renewed hostilities, Iran announcing a closure of the Strait of Hormuz, oil once again in the focus.
Absolutely. I think, Strait of Hormuz is not officially closed at this point of time. There is some ship movement. However, the shipping lines are charging a lot of freight, and the insurance cost has gone up. Yes, I think crude fears are back. The Indian basket, by the way, the one you were reading, I would like to just tweak that a bit. The Indian basket, this is the older rate. Now the Indian basket, after this rate went up a couple of days ago, you will find that the Indian basket price will go up beyond 70. The most traded crude around the world, Shivani, is Brent. So if we look at Brent, it is at about 78, 79. It was 72. So this is again, as I said, fueling the fears of inflation. We saw in India the petrol diesel prices being hiked, and there was a hope that petrol diesel prices may come down. The petroleum minister did a press conference or probably spoke at some platform a few days ago that we'll wait for 2-3 months because the oil marketing companies have suffered losses, and we'll wait for the prices to stabilize. I think they don't seem to be stabilizing. So the hopes of, petrol diesel prices going back, or shall I say the hike being taken back, seem to be fading away, at least as of now. although anything can happen, President Trump and his statements are famous across the world. He can make a statement and shake the markets. For now, yes, crude fears are back. So are the fears for industry who use, fuel and related products as inputs, because if industry inputs costs are going to go up. And this is also shaking the stock markets for that matter, Shivani.
Absolutely. And Dr. Kohli, I will request you to please stay on with us as we are tracking the markets as well. The Indian benchmark indices in fact opened higher on Thursday, July 9th, with banking and financial stock markets leading the gains, while information technology shares came under pressure after investors reacted to the first quarter earnings of Tata Consultancy Services at around 9:20 a.m. The BSE Sensex was trading at 76,875.27, up 371.67 points or 0.49%, while the NSE Nifty 50 rose around 113.50 points or 0.48% to 23,995.55, inching closer to the 24,000 mark. Now, the Nifty Bank Index climbed 0.78% to 57,184.05, while the Nifty Private Bank Index gained 0.84%. HDFC Bank, ICICI Bank, Axis Bank, Kotak Bank and SBI were among the key contributors to the rally. So, Dr. Kohli, fortunately, we are still seeing a rally in the markets over here, and we are seeing slight around 0.4 to 5% increase in all these numbers.
Well, there are two reasons for this rally, Shivani, if we understand it from a technical point of view. One, of course, yesterday when the massive fall happened, Nifty fell down by more than 500. So sold. They said there was a lot of short selling in the market, because of which the markets fell down very, very sharply. And second reason for the recovery is because President Trump has given a statement that, we don't want to go into, this is not a war, this is just a reaction. Although I don't know what is defined as a war. When you bombed over 80 places, well, that is a classic war, but he says this is not a war, we are just reacting. And he's also saying that this will be over soon, we don't want to fight, and so on and so forth. So he keeps giving these mixed kind of statements which get reactions in the market. So the market has shown some kind of recovery today, although we have to keep a watch if this recovery will survive or not, because it all depends on what's happening. All eyes on West Asia, I would say, as far as the markets are concerned. Markets are keeping very keen watch, because there have been reports of a counter attack by Iran on Bahrain, Kuwait and Qatar. Or Oman, I don't know, one of the three countries.
Right.
And those bombings don't really help the market. Markets cannot be celebrating while the missiles are flying around. So we need to keep a watch on West Asia. This rally should not be taken very, very happily, because this could just be a recovery after the short positioning which was taken yesterday when this news came in, Shivani.
Absolutely. Thank you so much, Dr. Kohli, for your valuable perspective on those various indices.